Hi all, this is the first of a few videos going over the practice exam. So again, you have these questions, you have the solutions, but if you like to hear the sound of my voice walking through it and give you some things to think about as you're going through it, I provide these as well. And again, I think it's really important, try these questions first. Do the question, look at the solution, and quite honestly, if you have everything right, ignore my video. But if you're struggling to understand some of the stuff in the solution, or you're just looking at a different way of studying it, then here's a video for you. So question one, this is an inventory question, obviously, right? We've got some purchases, we've got some sales, and it says, assuming that perpetual inventory records are kept in dollars, don't know what that means, but it's perpetual inventory, determine the May 31 ending inventory and COGS for the month of May using weighted average costing. So weighted average, I need to do this table that I had gone through, and I mean you can just stick it anywhere here if you're answering on Excel. I'm going to track all my transactions, and the order of these don't really matter. I've got a number of units, I've got total dollars, and I've got per unit. Okay? Don't get real hung up on formatting, but I like to make it pretty, and I'm relatively quick at doing it, so I'm not too worried about time. And then I'm going to track the balances. Okay, you don't need to do this table, but I just find it the easiest way. So an important thing when we're doing these transactions, I need to do them in the proper date order. So I've got May 1, and then I've got the 3rd is my next transaction, the 4th, the 6th, the 14th, the 18th, and the 29th. So again, be careful. I mean, this went back and forth between purchase, sale, purchase, sale, purchase, sale, but there's no reason it needs to. There could be a couple of purchases in a row. So, May 1st, my opening balance, I've got 400. They're at $4 each. So, my dollars in inventory are 400 times 4. I'd kind of like to put decimals on this because it will be relevant. I wouldn't worry on the total dollars. And my balance, obviously, because this is the only transaction I have, is the same. And same thing here, I'm going to want dollars. You will need the decimal places there. Okay, now I'm just going to start dropping my transactions in. May 3rd I have a sale, so I sold 300. Now watch the dollars. I sold them for $7, but what I'm tracking here is my inventory, and my inventory is based on whatever my average cost is, which, given I only have one balance, it's the $4. So what's going to come out of inventory is 300 units at $4. What's in my balance? Well, now I used to have 400. I sold 300, so I got 100 left. I used to have $1,600. I took $1,200 of inventory out. And if I calculate my average cost, it's still $4, which it should be because I took them out at average, they stay at average. Sorry if I slurp my coffee. On the 4th, I bought 1,300. I'm just going to drop the transactions in here quick. At 410. On the 6th, I sold 1,000. And I don't know the per unit because I'm using average. On the 14th, I bought 700. At 440. On the 18th, I sold 900. And on the 29th, I bought 500 at 475. Okay, so let's fill in the blanks here. I bought 1,300 at 410, so 1,300 times 410, I added 53,330 to my inventory. So again, I need to track how many units do I have and how many dollars do I have, and based on that, I can figure out my weighted average. So I had 100. I acquired another 1,300, so now I have 1,400 units. They were worth 400. I added the 5330. So now my average cost is $409. Again, just take a quick look for reasonableness. It needs to be between $4 and $4.10, and a lot more than at $4.10, so it should be closer to that. Then I sold 1,000. What comes out of my inventory when I sell something is my weighted average. Okay, so I'm going to reduce inventory by 1,000 times 409. And you can see there's a little rounding there. I got 409.3. Don't care. Don't care about 5, 10, $100. You know, rounding is fine. Track my inventory again. Had 1,400 units. Sold 1,000, so I got 400 left. I had 5,730. I took 4,093 out, so I got 1,637. And this had better be 409. Right? Average has to stay the same. Bought 700 at 440. My apologies if this is fast, but again, you can pause me if you need to think about anything or listen to it again. And I update my inventory. I had 400. I added 700, so I got 11. I had 1,637. Added 3,080. And again, dollars divided by units. And this should be somewhere between 409 and 440. That was 429. Sold 900 at average cost of now 429. And update this as well. I think I can just copy these. You have 200 units left, $858, still at 429, so that looks good. I can probably copy it down to the next one too. And then I bought 500 at 475. And again, my average goes up because now I bought at 475. So that's my table of calculations. For weighted average, I think this is as easy a way to calculate as anything. You could try shortcutting, but this is a lot more straightforward. Make sure you answer the question. So it asks, determine the May 31 ending inventory. That's this. Right? This is my ending inventory. And my COGS, well, that's equal to every sale transaction. So it's this 1,200 plus this 4,093 plus this 3,859. I mean, you can keep the minus sign on here. I'm not going to get hung up on it. You've shown you know what calculation to do. I mean, if you want to turn it into a positive number, we could do that. Okay? So that answers A. B, and I had this wrong on the original solution, I've updated it. Assuming we use perpetual inventory system and FIFO, record journal entries for the May 4th purchase and May 6th sale. So a purchase under FIFO, or under anything, if I'm using perpetual as a debit to inventory and a credit, this is to accounts payable because I believe it said purchases on account. So if I'm buying on account, I do want you to use accounts payable. And it's just whatever I bought. May 4th, $5,330. And then I want the May 6th sale. Again, the heading said these are cash sales, so you do want to put it to cash. This is just my standard sales entry. What did I sell on May 6th? I sold 1,000 at $7. Well, I can do that math pretty easy. That's 7,000. My cost of goods sold, though, now I have to figure out what 1,000 did I sell. So what did I have in my inventory at May 6th when I made this sale? I started with 400 at $4. I sold 300 of them. So I still have 100 left at the $4. So I would have sold those. And then the other 900 I sold must have come from my May 4th purchase. And those I paid $4.10 for. So I've got 900 units. Again, FIFO is a layer, right? So this layer is at $4.10. Just to make it a little clearer. So my cost of goods sold for this transaction in FIFO is $4,090. That's it. I thought I'd get a couple questions in 10 minutes. I only got the one. And if you look at the solution on the Excel sheet, I've got marks thrown in a column on the right just to kind of let you know where the marks lie. Thanks all. I will do another one with another question or two.